You ready? Charts are ready? Our bull's getting ready.
It's all here.
It's the yellow sheet. It's not white.
Yeah, I didn't find that writing pad.
A lot of people are suffering with this. They are not able to find the bear market.
You can let him
I actually have yellow. See,
That's a good
trying to
one.
take a leaf
That's
from
a
your
good-
old habits.
Yes.
Okay, our bull's getting ready for the next move or the big move what we saw last Friday and this week. That's behind us now.
I think it will consolidate. It will take time. We're going to head much higher, I think. I think we will head to around 13,500 on the intermediate time frame.
13,500.
Yeah,
Which
that's
means what you're saying is that a new high and
substantially
Way
over
beyond that.
Way.
Yeah.
But the fact is that one must remember that we've moved 10% in 2 days. So I think that we could go in a bit of consolidation, a few hundred points.
Okay.
And there are two things. One is that global markets also seem to be pausing. And, there's a lot of commentary and chatter. How much it fructifies, I don't think much will happen. But even they will eventually move higher. But I think that that's something that's going to put a bit of a pause. The second thing is I think that we've got corporate earnings coming up next month. And I feel that will be very, very important. Yes, we are not expecting anything spectacular from there. But I am very interested in the commentary that comes from companies and corporates because they've had a very big benefit on direct taxes. It's actually how they are going to really, use it. Whether it's going to be straight profit after tax or is it going to be, some sort of capex plans, etc., etc. So I think that the next 1 month will be very, very interesting, and it will not be just across the board what we've had, a 10% short covering kind of rally, which was the nature of this rally. I think it will be a little more differentiated, and you can already see in the markets, like you say, banking as a sector has done well. But what the PSU banks are doing vis-a-vis what some of the private sector banks or corporates are doing is very differentiated. So the market will start different. The 10% move has been across the board.
Sure.
In most. It's been like an index short covering rally that really happened. And there were a lot of shorts in the system. But I think going ahead, I feel that it will be a little more differentiated.
Right. Atul, just taking a leaf from your last conversation with Nikunj, where you were cribbing about the market text at that time, things were very different, and you said that the government has to do a lot more for the market to move forward. Ever since last Friday, what one has seen is that the PSUs are back in focus, and how. Anything from an NTPC to a BPCL to GAIL, what have you. The entire sector is charged up because now the expectation is that after corporate taxes, next is going to be divestment.
Right.
Do you think it's risky going long on these charts, or do you think this is a big directional move which has come in on all these names, and particularly in OMCs?
No, you're right. I personally think that it's a punt. There is a feeling that there's going to be massive PSU divestments, and that's the kind of murmurs that there are on the street.
Totally.
And that's a punt. That's a faith rally. However, I don't think they are compounding stories or they are backed by earnings or anything that is there. If it doesn't happen with the time frame, they also tend to fizzle out. And we've seen this repeatedly, whether it's PSU banks, even these OMCs, etc. So it's a bit of a punt that is there on expectation that something will happen. It is likely to happen. But if it doesn't, however, I don't think that it can be a long-term part of your portfolio, because ultimately in your portfolio, what you're looking for, or at least what I look for, are compounders. And one cannot play this. They are great for an individual trader, but I don't think as a portfolio you put it in on the hope that there will be something. Yes, if you see value, if you see great price, you see great trends, some of them do have it also, then it's great. But I wouldn't just play it for one event, which who knows, may or may not happen.
This move, Atul, the next 2,000 points that you're seeing, is it going to come primarily led from domestic buying? Are you seeing that force from FIIs also in terms of sentiment? How are you anticipating?
See, FIIs have yet not, they've been on, off. One expected that the number would be blue all day, all days. But I think that hasn't happened. But I personally think that they will, again, I feel that they would look for numbers. They would look for performances, corporate performances. And I feel that is still some time to go. What has really changed exactly a week ago at this time? I think it was Friday. I think it's almost like a weekly sort of expiry for us. What really changed is what Aisha mentioned earlier was a sentiment. When Nikunj and I were sitting and talking last week, the mood was bad. We are optimistic, we are bullish, we are invested in this market. That there is no doubt. Our stocks held on very well. They were doing well. But what was lost from budget to this month till last week was the faith, was the hope. We always thought it's Modi 2.0, there are going to be some big bang stuff, this $5 trillion economy, and it all seemed like one pack of, marketing gimmick. But what really happened was the size and magnanimity of the move really brings that faith back. And that's what I think gives the market another 3-6 months. You know, we've been working on this, numbers are going to improve, and we've been hearing it for years. Till about a week ago, I think we had just, you know, the sentiment had gone bad.
But you saw the magic play out only last
Yeah,
Friday.
I mean, and it was something which no one could anticipate.
But then you see that point move to the new levels that you're talking about.
Right.
Assuming that the even further conviction comes after we see it reflected in earnings, what's the
Right.
kind of timeline you're looking at for that new high?
I think it will take a year and a half. It will, as I said, it will take time. And it will have to be backed by numbers. It will have to be, you cannot keep having a hope rally. And I think that this, and the kind of statements, even if you hear the Prime Minister's speech, you know, with the corporate bigwigs in the US in the last day or two,
Yes.
you understand that it is not the end. And now, you know, you have to believe that this government has got a mind on that 5 trillion number. How they do it, whether it happens or no, only time will tell. But yes, the attempts are going to be there. And then you don't want to mess around. As I say, you don't fight the Fed. I don't think you want to fight Modi at the moment.
You know,
Where does leadership come in for 13,500? Sorry.
I think it's going to be quality. Again, most people are trying to say mid-cap, large cap, etc. I think it's quality. The pain I have seen in people's portfolios, and I meet them, large investors, every day, is so tremendous in that, you know, junk space where they're down 50, 60, 70%, that I don't think money is going to come into that. Yes, you will see pullback rallies, or you'll see oversold rallies, or a little bit of game, but money is going to move to quality, whether it is large cap, whether it is mid cap. So I think quality is what is really going to pan out. And you're already seeing that when the fall happened, I was telling you that, okay, portfolios are holding out because you're in quality. And as and when the market reversed, the leadership that you found in this space was fantastic. So I personally think it's going to be quality driven.
So I know you're looking at the private banks, as is the rest of the market.
Fair
What
enough.
would be next in the pecking order?
No, I think there are a lot of other sectors we've spoken about, like something we've been overweight is specialty chemicals. We've been in overweight for the last 2 years. I think insurance is another very interesting sector, which you find that even when the market was falling, these stocks continue to make new highs. And even when the market is going reversed, you'll find that they still continue with their march.
So you're finding those value picks out
I don't think it's value. I think it's growth.
growth.
Okay, I'll talk about basics, right? What should one do and what should one not do in this market? As a thumb rule, and you take a lot of pride in saying that don't go against the mob, because if you go against the mob's going to rob you. Be a trend follower.
Trend investing.
First, don't go short at all. Has that time changed where you made money by going short, but now has the rule changed?
The question is the size. If you're trying to play short for a massive move, I don't think that is there. Yes, if you're playing for 50, 100 points, you know, those guys will continue to play, Nikunj. It's their bread and butter. That's their job, you know. That will keep happening. And that's very important.
Of course,
because
that makes
for
the
a market, yeah,
That makes the
exactly. It
market.
gives that liquidity. So if you're playing for 100, 200 points, yes, I think it may make sense any
That
of these
could happen
days.
while we are speaking.
Exactly.
That could happen, you know, tomorrow morning.
Exactly.
We don't know.
For that group,
It happened
you know.
day before.
Yeah, and you know, mind you, there is a very big number. There are a lot of guys who are playing these option strategies and things like that. Yes, last Friday was difficult for many, but there are a lot of guys who have a lot of systems, and they're a major part of the volume, actually.
Fair point.
And they provide liquidity, so no complaints. Yes, if you're playing with that and you're really fast and you're quant-based, it's great. But if you think that, you know, you can take a strategic short call, I would be a little
I'm
careful.
asking you these three basic questions. One, don't go short. Second, do you expect markets to move slow and steady,
Right.
but they would move gradually higher? Or do
Right.
you expect that markets in the climb to go higher would be very choppy? There are two ways market can move. They can move slow, but the move could be linear. It does not
Right.
pain you.
Right.
But like what we saw on Wednesday, a crack, Thursday, a big
Yeah,
uptick.
yeah,
Impossible to predict, right?
Absolutely.
So are we in for a move which is going to take the markets higher, but the choppiness is going to be the major thing which we need to watch out for?
I think it will be more gradual because I personally think that the next rally or this numbers that I gave you will be on the basis of some numbers that will come through. And these do not come as a surprise. You know, they get built in, you know, there is a process to it. The insiders, then the brokers, and then the public. You know, there is always that cycle that happens. Yes, the only joker in the pack is government announcements. That is something which nobody can, assuming they decide to divest BPSCL 100%. I'm just theoretically, you know, talking. I mean, I don't know anything about it. Yes, that will lead to a trigger. So I think that could be the jumpy points, and there we don't have any control on. The only thing is you be with quality, you be with numbers, you keep with compounders, stay with the trend. Yes, if you're lucky, like how we were last week, it all worked out fine. Sometimes maybe I don't have a BPCL or HPCL in my portfolio. I may feel missed out. But you can't be in every day of the season be happy with it.
Okay. My third question is, and again, just a third follow-up question. We are talking about the trends here. For those who missed the bus, and trust me, that's a very large number.
Yeah.
Very large number.
Ask me. Yeah, I know.
The bus has moved on.
Absolutely.
But before it reaches the final destination, how does one catch the bus? Jump now or wait for a decline? The decline could, in my view, could come when quarterly numbers are coming out.
Right.
So is that a better strategy?
I've for many years that I've been in the markets, and now that I manage and I meet investors every day, people wait for corrections. Nobody invests in corrections. People, when they feel left out, when the breakouts happen, I'm receiving top-ups in my PMS from clients who first transfer the money and then let me know. You know what I'm trying to tell you? The urge, and then they call you and say, have you deployed the money?
So
should we top up more? So what I'm trying to tell you is that these are, for whatever we may say. A week ago, if I was meeting clients, they loved you, they loved your product, they loved everything about you. And then they say, yeah, we will consider it. They may say, thoda bhi liquidity ka tight hai. Suddenly, where's the liquidity coming from? So the fact is that for whatever, my observation is that we so-called wait for corrections, but money is deployed in breakouts. And at some stage, you have to have the faith, you have to have the bite the bullet. You're never going to get a market correction, you are going to buy and next day the market's going to go up. No, it's never going to be a perfect entry. You have to look at the larger picture. And I think from that point of view, whether you
jump
invest,
in whenever you're saying.
whether you invest now 200 points lower, 300 points lower, Aisha, nobody can time it to perfection.
Everyone was saying that from a return perspective, you're maybe closer to a 10% was probably more reasonable to expect vis-a-vis the days when we saw certain stocks that were giving exponential returns. Do you think we're going to see that come back?
I don't think so. You're going to get these 10% pop-ups in a week, in a day or two. No, I don't think
over the growth scenario that you're painting.
But yes, it will be coming back to Nikunj's question, that yes, that is there, but it will be more gradual and it will be more differentiated.
Sure.
It's going to be about, as I said, it's about numbers. I'm very interested in the kind of commentary that managements come out with. The savings that they're going to make in taxation, direct taxes, how are they going to use it? Is it going to be profit after tax? Is it going to be for, promotion, brand building, technology and things like that? I feel that this is, so we all have penciled in a number that this was a tax rate, why so much so should benefit. But what is going to happen with that money? I think that the next 1 to 2 months should give us a lot more clarity, because a lot of numbers will come, companies will talk, there'll be analysts meet, and I think that will give us a deeper understanding of what stocks to bet on for the next move.
Okay. So since you've already penciled in that 13,500 mark, tell me what's going to push the Nifty and take it to that mark? Will it be a cluster of ICICI banks, Nestle's, the usual suspects, HDFC Bank, or do you think there are newer names like an L&T perhaps which could contribute to the move?
I think, Aisha, that it will be much more broad-based, and yes, a certain segment of the market has done well. It will broaden. It has to broaden, number one. Number two is that the theme that I stand by is quality. The important thing is that you have let us take real estate as a sector. The moment I tell you real estate, it's so, stocks are down 90%.
You always liked the quality within
exactly.
real estate.
But even in real estate, you'll find a few stocks nudging towards lifetime highs. So what I'm trying to tell you is that it is not going to be just a large, people are just stuck on this, when will mid-cap and small caps move? In small and mid-caps, I feel that poor quality is not going to see, you're not going to see those levels. However, where there's quality of management, quality of earnings, you will feel that those levels are already getting taken out. And real estate is a case in point. You can go and see that there are so many stocks which, in spite of, the biggest pain point in our industries or thing is you're talking about real estate, and here are stocks touching lifetime highs. How is that happening? What is the differentiator? And that is happening in sector after sector. You look at cement, you look at bearings. You'll find that this theme is really playing out.
Atul, what happens when markets come back and when we sit at an all-time high, risk comes back? And risk cannot be played by buying a Nestle or a ICICI. ICICI Bank, okay, still you can buy risk with corporate bank, but you cannot buy risk by buying consumer names.
Right.
Do you think for a trader who says, look, I don't care about quality, I care about trend, and I care about making money when the trend is higher.
Right.
Do you think risk will come back?
Yes, definitely it will come back. There are cycles. Always leadership, you will find, that the larger players, the quality, etc., the safer bets will move. And at some point, that catch-up will happen. But when will that catch-up happen? That is, but because at the moment, even the larger ones that we're talking, the big names, as I said, there's a hope trade. Yes, they are holding out, but you want to see a broad-based, almost revival kind of coming into the economy. And yes, a catch-up will happen. So it will happen. Everything has its time. The question is that how much time you're going to be willing to get. And again, as I said, that it's not going to be across the board. Just because you have a small cap stock and it's in your list of 150 stocks, which most retail guys have in their portfolio, no, there is no guarantee that it's going to go up.
What will pour cold water on what we're discussing? What we've discussed in last 20 minutes, actually a little over 20 minutes, is markets are headed higher.
Right.
Stick to quality.
Right.
You will make money by going long.
Right.
Don't go short.
Right.
But I wish markets behave the way we want.
No,
They
it
never
doesn't.
do
It
that.
doesn't. Never does.
What will pour cold water on your thesis? What is that sacrosanct level beyond which you would say, look, I was wrong. I need to be a seller now. I need to cut my longs.
So if I take at the price levels, see, I feel that the market has made a higher bottom. So the last bottom we made, a major bottom, was 2018 October, if you remember. Around 10,000 the Nifty was. Now we made a higher bottom at 10,600 or thereabouts, which was last week. So for me, the positive thing why I'm giving out these numbers is the fact that I feel that the market has made a higher bottom in space. So if that bottom gets violated, I would be worried.
I'll mark that on the screen. Let me mark that on the screen. Let's look at the 1 year chart of the Nifty. And Atul, I'm going to use my new toy, which is we can actually do that kind of a marking here. So there you go. My producer is going to fire the 52-week change. So we are looking at, Atul, roughly market bottom at 10,500, right?
No, I think it went to at 10,000 October of last year.
Yeah, so this is where
so where things starts, that is a bottom, one circle there.
Yeah.
And the second is where you've drawn it,
okay,
right?
So you would say this really is a watermark.
Yeah, I think for me, this
the low
move,
watermark.
Right. So that would be almost like what you will call last week lows,
Okay.
Yeah. So I think that level of 10,600, I think would be a very important level because I feel the market's made a higher bottom. If that gets violated, I'd be really worried.
Atul, you track the global markets as well closely. Is the risk for US yields still there? Because, that's the big global fear that could challenge just everything that we're talking about here in India.
Absolutely.
What's it telling you?
I think that it would stabilize at these levels. There is a feeling that it is going to collapse and things like that. I feel it's at historical levels and it could bounce around. So it may spend some time here and not dominate headlines, which I think is good enough. The thing is that if that cracks, it will, and it is a mother of all asset classes or charts in the world, So if that happens, yes, then a lot of things can change. But I personally think that it would stabilize or spend some time here, where it's like the dollar also, the DXY. If it's not in headlines, it's good. Because the moment it makes headlines, then a lot of things go out. A lot of things go out of whack. So that not being in headlines is very good. And if it even goes for a multi-year sideways, it's even with us, with our currency and bond yields. As long as they are not headlines, they're good news. The moment they make headlines, you got a bit of a problem.
But you're overall reassured that we're headed on the right track now.
I hope so. That's how I'm positioned.
70%, 80%.
Yeah, but even while the markets were going down, I was 95% invested.
Sure.
So from that point of view, one goes through that ups and downs and pains. You have to ultimately live with the faith. You have to, it's beyond just numbers, beyond a point in time. And I'm one of those who believes that Indian markets will be substantially higher. And I'm betted for that. Yes, sometimes you go underweight, overweight, but more or less you are in, and you get rewarded on a day like last week. If you're in, there was no chance. So either if you were sitting on cash, you missed the whole bus. So it's about being invested and keeping a longer term faith on the trend.
Atul, I see the anchor pin on your jacket, the diving watch is there. Where are you heading next? Is it a sign?
No, I just got back actually.
Yeah.
So I guess it's a hangover right now rather than
You got back before the market rally, right?
Oh yes, definitely. A few months, month ago.
Okay.
Yeah,
Good to have you. Thank you very much.
Thanks a lot. Yeah. Thank you.